Arvind, mute
Yeah.
Arvind.
Good evening, one and all. Today's speaker, Sri Avinash sir, President TPA Kiran sir, President Tax Friends Hari sir, past presidents of both the association, seniors in the profession, friends. I welcome one and all to this webinar on income tax. Before speaker start his presentation, I will request our President TPA Kiran sir to welcome and introduce TPA to the members. Kiran sir.
Good evening, everybody. I, as a tax practitioner president, would like to brief regarding TPA in short. TPA थाने की भी एक वेल नोन संस्था है जो ऑलमोस्ट 33 इयर्स कंप्लीट कर चुकी है एंड 300 प्लस लाइव मेंबर 400 के नियर में उनका लाइव मेंबर्स है. एक अपॉर्चुनिटी आप सबको भी बताना चाहूंगा कि रिसेंटली थाने जीएसटी पे ऑफिस के अंदर अपने नया एक ऑफिस मिला है जो गवर्नमेंट ने हमने को अलॉट किया है. सभी मेंबर्स उसका यूटिलाइजेशन कर सकते हैं, वहां पे जाके बैठ सकते हैं. एसी केबिन ने लगाया हुआ है सब चीजें. इन शॉर्ट हम बहुत जल्दी हम लोग वहाँ पे लाइब्रेरी और बाकी सब चीज शुरू करेंगे. कंप्यूटर का फैसिलिटीज रहेगा, कंप्यूटर एंड प्रिंटर का फैसिलिटीज बहुत जल्दी चालू करेंगे हम लोग वहाँ पे. अभी भी ऑफिस अपने पास वर्किंग हो गई है. कोई भी अगर जीएसटी ऑफिस जा रहा है तो वहाँ पे नीचे ग्राउंड फ्लोर पे लेफ्ट साइड के ऊपर जीएसटी ऑफिस के सामने की साइड पे टीपीए की का मेंबर्स फैसिलिटी सेंटर्स ओपन किया गया है. सबको रिक्वेस्ट करूंगा कि वहां पे विजिट करें. विथ रिस्पेक्ट टू टुडे स्पीकर, आज के दिन से अब वापस एक इनकम टैक्स का अभी 26 एज अभी सब शुरू हो जाएंगे तो अपना रिटर्न भी सब फाइल करना शुरू हो गया होगा या तो अभी बहुत नजदीक के पीरियड में हम लोग शुरू करेंगे. फॉर दैट वी हैव रिस्पेक्टेड स्पीकर फॉर टुडे हु विल गाइड अस ऑन दिस वन. सो नॉट वेस्टिंग द मच मोर टाइम फॉर द all the learners, I will say thank you for everybody to joining it here, and thanks.
Thank you, President sir. Now I request Hari Dudani sir to say a few words about tax friends. Hari sir.
Thank you, Arvind ji. Good evening, everyone. I welcome you all to this knowledgeable session. I, on behalf of Tax Friends, would like to update you that Tax Friend Association is 47-year-old. We have stalwarts like K.K. Ramani, J.D. Nankani, Vikram Nankani, Gobind Tikchandani, and even D.M. Harish was part of Tax Friend. It is my privilege to welcome you all on this insightful session on income tax and TDS along with the changes in ITR. We aim to deepen our understanding of taxation law and best practices. We, as a Tax Friends, honored to host such important discussion along with TPA that brings together experts and professionals. We have distinguished speakers, C. Avinash Rawani on the subject matter to shed light on the key topics. I encourage you all to engage actively, ask questions, and take full advantage of this opportunity to enhance your understanding. Once again, I extend a warm welcome to all the participants. Over to you, Arvind ji.
Thank you, sir. Now I request, before speaker sir start his presentation, I will request Piyush Gada to formally introduce our today's speakers. Sri Avinash sir. Piyush bhai. पीयूष भाई आप अनम्यूट करो. पीयूष भाई आप म्यूट पे हो. अनम्यूट करो पीयूष भाई आप. हेलो. हाँ अभी ऑडिबल. प्लीज गो अहेड.
Good evening, everyone. Yeah. It is my privilege and honor to introduce to you a distinguished professional and a highly respected member of the Chartered Accountancy fraternity, CA Avinash Rawani. Avinash Rawani is a fellow chartered accountant with over three decades of rich experience, having been a member of ICA member since 1993, May 1993. He is the founding partner of Rawani and Company, a firm specializes in direct taxation, auditing, and company law matters. Through his illustrious career, Shri Rawani has made significant contributions to the profession. He has delivered over 600 lectures across India on topics related to income tax and company law, addressing audiences at various study circles and forums under ICAI, WIRC, and SIRC, BCA, the Chamber of Tax Consultants, and several corporate and academic institutions, including IIM. His thought leadership is reflected not just in his lectures, but also numerous articles and publications. He has been a core team member of ICAI, e-filing help desk, and actively involved in various ICAI committees, including Corporate Law and Governance Committee, Direct Tax Committee, and more recently the Committee on Commercial Laws, Economic Advisory, and NPO Cooperative. He had co-authored notable publications such as Technical Guide on ITR Forms, the Guidance Note on Revised Tax Audit Reports, and Practitioner Guide to Audit of Small Entities. Today, we are fortunate to have him share his insights and knowledge with us. Please join me in extending a warm welcome to C.A. Rawani on behalf of Tax Practitioners Association Thane and Tax Friends Association Mumbai. Thank you, Arvind.
Thank you, Piyush Bhai. Now I request Speaker Sir to kindly take the charge of the session.
Thank you, Piyush Bhai.
Sir.
Thank you, Arvind Bhai. Thank you, Vijay Bhai, and all the dignitaries of both the associations. Before starting this presentation, I would like to give you one good news that this income tax returns filing due date has been extended to 15th of September 2025.
Sir, it is official?
It is, yes, it is official, and I was just verifying on the income tax Twitter page. It is on the Twitter page, on the income tax department's Twitter page, it is there. So it is now on the official on the Twitter space. So I was just verifying it. So on the Twitter space it is there, so it is official. Because forms has been notified that the forms has not been made operational for e-filing. So just this is for what good news is there. So if it is there on the Twitter page, it is there. So Twitter it is available.
Yeah, it is available.
Yeah. So because we should not rely on Elisa's knowledge, because WhatsApp it started coming, so just verifying on the Twitter page of the income tax department, it is there. So coming to the topics per se, I think share the presentation.
Yeah, please, sir.
So topic per se today is about the changes in income tax provisions, changes in ITR and TDS provisions, what has been given to me. But if time permits, we'll cover about changes in Form 3CD, 3CD also. There is change in 3CD that is going to cover. So this per se topic today, I'll start basically what we discuss is today is only for the purpose of discussion only, and it should not be taken as a legal interpretation. And whatever is will be shared, this whatever the material is being circulated will be circulated to you, and it should not be basically this when you apply it for your client, it should be verified first, because it is just prepared for the purpose of discussion. And please do not blindly rely it based on this, because we have just taken it from whatever the sources which were available with us. So starting per se, basically, if you see these details, I would just like to share with you the statistical information which is there, the Income Tax Department's website. See, basically last year till 31st of March, total total registered users on the income tax portal were almost around 14 crores. And in 14 crores users, if you see, 12.91 crores are the individual users on the department's portal, and out of which 12.91 crores users,
Other people have linked is only 11.86 crores. So till if you see, despite of so many penalties levied, so many extensions which has been given, still the 1.5 crores people have not yet registered on the ITR portal. So still there is a difference in that. And last year almost around 9.19 crore people have filed the ITR, so which is almost around 10% increase in the overall filing. And last three years, if you compare the figures, there has been increased of around 10% every year. Income tax returns verified last year were around 8.64 crores, and the refunds were issued by the department was 4,35,000 crores and 35 crores. So these are basically the statistical data which were available on the income tax portal, and the US department is publishing the statistical data every year, every month. And the income tax department utilities, the people who have used the department utilities for filing the returns were almost around 40 crores. 40% of the people have filed using the returns. So these are the statistical figures for the last year as on 31st March 2025. Then if you see the ITR return filings, the growth which you see, the growth of the ITR filers in ITR 2 and ITR 3, largest growth was there 35%, around 35% in ITR 2, which is meant for basically individual and HUF. And this filers, if you see around 99 crore 11 lakhs, the filers where 2024, if you see, with the filers, the comparative figures are there. Then if you see in last year, that is 24-25, when this form ITR U was introduced the total filings of the returns throughout the year for ITR U was only 602 people who have taken the benefit of ITR U. That is ITR 8 which is followed. So see the only percentage which was people have taken the benefit in full benefit which you have taken. So these are the details of ITR filings. Then coming to the number of filers in individuals, see the persons who are disclosing the income, who have disclosed the income last year, that is up to 10 lakhs. You see the filers are 3 crore 36 lakhs, and up to 5 lakhs were 3 crores 81 lakhs, and up to 10 lakhs were 3 crore 36 lakhs. If you add up both these sums, it comes to roughly around 7.50 crores returns. And between 12 crores, 10 crores, 10 lakhs to 50 lakhs, it comes to 1.29 crores returns. So add up all these figures, roughly it will be around almost the filers which were adding up to the people who had filed the returns up to 31st March 2024. So if we sum up all these figures and we come to the filing figures of 31st March 2025, wherein the limit of which 12 lakhs it is coming, that is exempted for taxation limit. So those will be within the bracket, out of the bracket of tax filers. So the government will not be getting any revenue out of this type of filers. And when we come to the range of filing up from from 1 crore to 5 lakh crores return filers for individual, in across the India, the filers were 2,97,000 people had filed the returns, and between 5 crores to 10 crores, 10 crores. Total in India, there were 16,797 people has disclosed this income. Similar figures, if we compare for 2024, if you see the individual filers for above 1 crore people had declared were 2,25,963 returns. The people had declared the income above 1 crore were 2,26,000 roughly. So these are the statistical data just for the purpose of discussion and just for which figures are shared with you. And coming back to the provisions per se, now when we discuss the returns, we need to start with the provisions of income. We have section 139(1), that is is a basic returns filing provision that you have to file the returns on or before the due date is specified. And for filing the returns, you have to file the returns to comply with the requirements that before the due date, you have to pay the taxes, and if you file the returns within the specified form, you select the specified form. You can use the department's utility, you can use the private software, there is no compulsion to use anything. Then while filing, you have to pay the tax and you have to complete the e-verification and give it for the processing to the department. Second thing, there are certain type of, if you don't have the income also, but section 139(3) says that if you have certain categories, means if you have a loss also and you don't have the income, but there are certain criteria. If you have fulfilled that criteria, that is you have a credit card or you have spending of certain amounts, then also we are required to file the returns of income, but that also is on or before the due date. Then you have to file the returns. Suppose you have missed that criteria due date, then you can file it after the due date, but that return has to be filed. You can file before the due date, before on or before the 31st of December. But there you have to file this return with a specified late fee, depending on the nature of the income, or depending on the nature of the income, with certain late fee which has been prescribed. And with the late fee, you can file the returns, which is treated as a return file after the due date under section 139(4). And the procedure, other procedure remains the same, but e-verification also has to be completed. Without e-verification, your returns cannot be e-processed on the system. The problem here is that people, if you see the first slide, what we discussed here, wherein what has happened that people, after filing the returns, they don't complete the e-verification process. When they don't complete the e-verification process, the return lies over there on the system, and the system doesn't accept that return for processing and is not processed. So even if you are filing the return of income and you're submitting the return of income and your return, and then if you want that return should not be processed, then there is on the income tax portal, there is one you can have the income tax department has given a facility of discarding the return. So that you can discard that return before completing the e-verification process. So that facility is also there. You can get that return discarded and you can submit a new return, but new return. After filing the return, if suppose department has identified certain errors in your return, then it takes sends you the default notice. That default notice comes under one section, that section 139(9), and that default has to be removed within 15 days. Time limit has been given. Within 15 days, you have to rectify that defaults which has been identified at the time of processing the returns. And if you don't rectify that defects within 15 days, the return will be taken out from the system, and then it will be treated as return which has not been filed, and all other provisions of the Income Tax Act related to non-filing of returns will be non-filing of returns will be levied on the SSC, and then the penalties etc. will be levied. After consideration of all these things, suppose returns has been filed, everything has been completed, and certain other income has been identified after processing the returns, after the completion of the time of 31st of December has been over. And then if the SSC has identified certain additional income and he wants to then disclose the income, then he can file it with updated return. That benefit is available because that was introduced from first Finance Act 2022. Coming to other procedures, that is basically after filing the returns, if certain mistakes has been identified, then the SSC has the option to rectify that mistakes, to file the rectification. You can rectify these mistakes by filing the rectification return, but then that can be done before the completion of assessment or before the end of the relevant assessment year, whichever is earlier. Earlier it was relevant assessment year, but now it has to be filed on or before 31st of December. That will be treated as rectification of mistake. Earlier the belated returns were not supposed to be rectified, but now the system is permitting The system, the provision has allowed that you can even revise the belated return also. In this return, you can disclose the additional return income, but it does not. You cannot reduce your income, or you cannot increase the loss which has been declared in the original return. Here, one problem is that the concealment penalty can be levied in certain cases if there is extraordinary disclosure. The chances are there, and when you are filing these returns, it has to be ensured that the tax which is there, which is payable, that has to be filed along with the return of income when you submit it. And here also, e-verification has to be completed. Then only this return will be accepted and it will be processed by the system. Otherwise, it will be treated as return as which is not been filed. Return, here one condition is that return cannot be revised after there is a if there is any search or seizure which has been done, which is there in the premises of the SSC. Then we come to the provisions which is related to updated return. Updated return was there introduced in through Finance Act 2022. The provisions of updated return says that it can be filed up to the period of 4 years. Earlier in the last year, this assessment year 2024-25, it was 2 years. But Finance Act 2025-26, it has from Finance Act 2025, the time limit has been increased to 4 years. 4 years. So now it has been increased retrospectively for a period of 4 years, and the return utility has also been made available. Now you can revise it up to a period of 4 years. But there are certain conditions over here. That is, option of updated return is only available once for one assessment year. That is, if you have used this option, utilize this for one assessment year one time, you cannot use this for another time for that particular assessment. Then in this in this return, you can report the additional income, but you cannot reduce any income, or you cannot increase any loss. It is as per the amendment provisions. Tax has to be paid on or before the return of income. Other return details remains the same. And similar way, e-verification has to be completed, then only the system will accept the return. And other way, the similar case, what was there in the this return cannot be filed when there is a search and seizure case, which is search and seizure is there in the premises of the SSC. So basically, this is related to the provisions of the return of income. Now coming to the budgetary amendments, that is Finance Act 2025. ITR 2, ITR 8, what was there? Earlier, existing provision was there that when you file a return within a period of 12 months, or you have to pay 25% of the additional tax plus interest. And if you file after 24 months, then you have to pay 50% of the additional tax for whatever the additional income you declare plus interest. And now another 2 years time limit which has been added, that is after if you file after 36 months from the end of the assessment year, you have to pay 60% of the additional tax plus interest, and if you file after 48 months, then you have to pay 70% of the additional tax plus interest. So if it is beneficial to the SSC, then you can take the benefit. Depending on the case-to-case basis, you have to analyze it whether that is beneficial or not. Based on this, you can take the decision. This provision is this effective date is from 1st of April 2025, and it is effective retrospectively. So this basically now which ITR has to be used, what ITR is, which ITR will be applicable, that all now ITR, all ITRs have been settled. There has been no changes in the ITR. So in last several years, ITR 1 to 7 remains the same. Only the ITR 8, there is now sold as ITR U or ITR 8A, whatever is there, that is there for updated returns. There are minor changes in ITR filing. That is earlier, what was there? That is, we had certain restriction that certain people will not be able to use ITR 1 and ITR 4, but certain minor amendment has been made, which will be discussed in the next slides when we come. So which ITR to be used, which not to be used you can just refer to this slide, because many of the people are now using the software, and in that software, the ITR is selected automatically by the system. And there in the software, one thing you can just remember that in ITR, it gives you, when you are using the software, ITR gives you the recommended ITR return. ITR return. So what it says that ITR is recommended. If you want to use any other ITR which is available, you can just identify the ITR. If the ITR says that this is the recommended ITR, if you want any ITR which is higher version, that is, suppose if you are eligible to file ITR 2 and you want to file ITR 3, you can file ITR 3. But whatever the additional information you want to use, which is required by that specific ITR, you have to fill that specific that information. You have to give the information required by that specific ITR. Then some question is there. Voice is low. You able to hear this or no?
It's perfectly, sir, perfectly बराबर आ रहा है आवाज.
नहीं,
No issue.
the special area voice is too low, that is why. Okay.
No, उनका फिर वो कनेक्शन में कुछ इश्यू होगा. आपका परफेक्ट आ रहा है आवाज.
Okay. ठीक है. So this is basically related to ITR forms. Okay. Then coming to this ITR forms, that is for LLP and all, is remaining the same. Now coming to the income tax slabs. Basically, there are minor changes in the income tax because what a relief was given in Finance Act 24. First, up to 12 lakhs, the relief of 5,000 was given, has been given, and from above 12 lakhs rupees, a relief of 10,000 has been given. The minor change here is given that surcharge has been capped as 20%. So that is the bigger change, this is the only change which is there. So 5,000 and 10,000, the relief has been given. So this is the change in the tax rate. Secondly, coming to the standard deduction. So those assessors who are opting for new tax regime, that is under section 115 BSC, that is, that SSC will be eligible to claim the standard deductions at a higher rate, that is 50,000 to 75,000. And in case of pension, family pension, this standard deduction available to them is being increased from 15,000 to 25,000. This is basically only for the persons who are opting for new tax regime, not for the old tax regime. Secondly, there was one profit and gains from business or profession. Basically, those SSCs who are having the residential house and they were letting out this house property, they were showing the income under the head profit and gains from business. However, there has been the amendment, that is Finance Act 2024 had amended this, wherein it says that those SSCs who have been showing as profit and gains of business or profession, that is for letting out the house property, they will have to now show it as an income from house property only, and the maximum deduction available to them will be 30%, not less. So it will be treated, the income has to be disclosed under the head income from house property only, and not as a profit and gains from business. So that care has to be taken up. Even if the property is held as stock in trade, it will be treated as a nature of letting out of house property only. So while filing the return of income, you have to see that you disclose this as a income from house property. Then there was a circular number 38 of 2025 dated 23rd April 2025, wherein now it is stated that 37 under expenses, that is amount which has been paid to SEBI or Securities Contract Act, Depositories Act 1996 or Competition Act 2002, which is in the nature of penalty for any defaults, for any loss, will not be treated as a income expenses which is allowable under section 37(1). So when this such type of expenses has been paid, then this should not be claimed as an expense. This will be not be allowable as an expense. So under section 37(1), this will not be allowable as an expenses. So this has to be taken care of. When you file, even if you do this tax audit, there's an amendment in tax audit also. So when you're doing the tax audit, in that also one clause has been amended. In that clause, you have to report this, whether this expenses is allowable or disallowable. Your tax audit also will be required. When you come to the tax audit, I'll give you the reference of this slide. So this is not an allowable expenses, so you have to disallow in the computation of income. Then about the another change, that is about the remuneration to the partners. So what was that? That prior to 2024, prior to financial year 24-25, the computation of profit, that is about the remuneration which was given to the partners, the book profits, that is first 3 lakhs, the remuneration allowable was for 1,50,000 on the 90% of book profit, whichever was higher, and on the balance 60% profit, it was 60% of the book profits. But from financial year 24-25 onwards, the profit allowable will be, deduction allowable will be, that is from the first 6 lakhs, 3 lakhs rupees, or 90% of the book profit, whichever is higher, and on the balance book profit, it is 60%, which is allowable. Now, first year thing is that whether you are required to amend the partnership deed or not. The partnership deed amendment will be required to authorize the above changes in the remuneration note. So this is where this is required to be done or not. This is my question first of all. So what is the first question here is come whether the amendment to the partnership deed is required to be done or not. So here my view is that suppose if your partnership deed says that the remuneration has to be given as per the Income Tax Act amendment from time to time, then your deed does not require to make any changes. But if your partnership deed says that it has to be paid, it has to be given in this way only, that is basically on the first book first 3 lakh, 1,50,000 or 90% of the book profit, and the balance 60% of the on the balance book profit 60%, and it does not specify any other thing, then you will be required to make the amendment to the partnership deed. Otherwise, you cannot give the remuneration as per the new amended provision. So you can see that when you pay the remuneration or when you allow this remuneration, specifically your partnership deed provides the clause, provides the specific specific remuneration details in the provided process. And whenever you do the audit, that is basically the tax audit also, when the remuneration is computed, at that time also in tax audit report, this has to be seen that the remuneration clause, specifically partnership deed, allows for provision of remuneration. Otherwise, what will happen? Your tax audit report will go incorrect. Considering the new provision of TDS remuneration to fix in, not required if drafted as per Prop 40B. Considering the new provision of the TDS remuneration to fix in the, what is the considering the provision of TDS remuneration to fix in the beginning of the year? I am coming to that when I come to 19040, when I come to TDS provision accordingly. Then there are 4 to 5 changes in capital gains. That is short-term capital. We had 2 budgets this year. That is first when the interim budget was there on 23rd of July, and then we had a full budget when the new government took over. So what was the first change? That is on 23rd of July, the short-term capital gains on the listed securities were increased from 15% to 20%. And on the long-term capital gains, where the security STT-paid transactions were increased from 10% to 12.5%. And secondly, the long-term capital gains, basically the unlisted securities of the closely held companies for non-residents, the existing rate was 10%, has been revised to 12.5%, and all other long-term capital gains were reduced from 20% to 12.5%. Now, what the other changes has been made, that is from indexation benefit has been withdrawn for transactions on or after 23rd July 2024. So any transactions which has been done after 23rd July 2024, basically any property which is purchased and sold after 23rd July 2024, you will not be getting the indexation benefit, especially for the resident individuals and HUF. Non-resident individual will not be getting the benefit of indexation. They will have to pay the straight 12.5% tax. Now, for properties acquired prior to 23rd July 2024, long-term capital gains tax will be lower of 12.5% without indexation, or 20% with indexation, whichever is beneficial to the assets. Provision to section 112 to 1A This is what it is given. It says that whichever is beneficial, so that will be applicable. Only for land and building or both for individual which is residential. Then date of transfer, that is basically the disturbance over there. Option to pay tax at the rate of 10% is section 45. There has been another amendment, is option to pay tax at the rate of 10% and the provision to section 112 has been withdrawn in the case of listed securities or zero coupon bond. The effective tax rate will be basically, if you see the transfer, if it is there prior to 22nd July 2024, the tax rate applicable will be old rates, and after 23rd July will be, from 23rd July onwards, it will be the new rates. Amount of non-taxable long-term capital benefits has been increased from 1 lakh to 1,25,000. So what has happened? The basic exemption limit, that is long-term capital benefit earlier prior to this, from this assessment year, this assessment year 25-26, the limit of 1 lakh has been increased to 1,25,000. Based on this 1 lakh to 1,25,000, the ITR has also been changed. So those assessees were not able to file ITR 1 and ITR 4 can now file ITR 1 and ITR 4 provided they have the long-term capital gains up to 1,25,000, which were not, they will not be able to file that return because they had to compulsorily shift to ITR 2. So now they are eligible to file ITR 1 and ITR 4 provided their long-term capital gains is less than 1,25,000 and they are resident individuals. Then another amendment, that is now the assets, there is short-term capital gains and long-term capital gains, the time limit has been clubbed in group. That is what is happened earlier applicable period for listed securities under section 112A for units of listed securities under section 112A and the units of equity oriented bonds was 12 months. The same, it remains 12 months in the current amended provisions also. But the 24 months and the 36 months time limit has been combined and combined from 23rd July to for all the assets, unlisted shares of companies and immovable property. So 24 now there will be only two periods only, 12 months for long term, 24 months for short term. Section 47(3) also has been amended. That is earlier that any transfer of capital asset by an individual or HUF under a gift or will or irrevocable trust, any transfer of a capital asset by individual or an HUF, the word has been added in the provision section 47(3). So this is the change. Second change in section 50AA is that now it has been added that section 50AA has been amended. That is now it says that to include the unlisted bond and debentures. So any capital gains, any unlisted bonds and debentures, if it has been transferred or redeemed or matured on or after 23rd July, it will be treated as short-term capital gains only. And section 55, it says the cost of acquisition for transfer of an unlisted equity shares under an OFS or in an IPO, then the cost will be treated, cost of acquisition will be or index cost of acquisition considering the cost inflation index of the financial year 2017-18. So you have to accordingly work out the indexation considering the base as 2017-18 onwards. Then that is now the presumptive taxation has been scope of the presumptive taxation has been enhanced to the cruise ships by non-residents has also been included. They have been given the benefit of presumptive taxation, provided the conditions, they fulfill the conditions. The eligibility, the all cruise operators, non-resident cruise operators can opt for the presumptive taxations. They who are on the business of cruise or ship operations, they can, if they want to opt for the presumptive taxations, they can opt for it. They have to report that their profit will be 20% of the aggregate amount received or deemed to be received and paid or payable to the non-resident SSC or any person on this behalf. and account of carriage of provision. So if they opt for this scheme, then they will also be entitled for certain exemptions under section 1015B, that is income from lease rentals of cruise ship in the hands of the foreign company will be exempt. Received from a specified company, obtained if they opt for 45BC, if both the foreign company and the non-resident cruise ship operating company are the subsidiaries of the same holding company. So if they qualify for this, then they will be given the exemption. And this is only for a period of 5 years. Then the startup benefits, basically they have been extended for a further period of 5 years. The period was getting over on 1st April 2025, but they have been now extended for a further period of 5 years, that it will get over on 1st April 2030. Here the benefit is that they are getting the exemption of profit for 3 consecutive years out of the 10 years from the date of incorporation. So those who have not availed the benefit of this, they can take the benefit of this provision. Then about this 80cc due to the deduction of the employers, that is those employers who are making the contribution to the pension scheme under the and the SSC, there is the employee who is opting for the new tax regime for filing the returns of income, then that amount will be exempt from the income tax. And we've come to the second slide for the working. And then what is about that any amount which is withdrawn from the NSS after 29th August 2024 by an individual will be exempt from tax. Now, one such working was prepared, that is basically in ET Wealth of 19th May 2025. They have analyzed this provision, that is 80cc due. A person who was getting a salary of 2 crore 22 lakhs. Same salary, this salary was getting a salary of 2 crore 22 lakhs in 2023-24 and 2024 and same salary is getting 2 crore 22 lakhs, out of which a person has opted for 80cc due. The employee is contributing 10 lakhs 51,000 from his taxable income, not paying to him. So by doing this investment, instead of getting him, so he has been able to save 10 lakhs 57,268 rupees as a tax. So this is just for your reference purpose. This working is available in ET Wealth. You can just go through that, how this working has been done. This is for your reference purpose. Then certain sunset clause were there, which were getting over on 31st March 2025. They have been extended. That is extension, that is section 80LA 2D, section 10.4F, section 10.4H, and section 47.7D. The time limit was getting over, is extended for a further period of years. Then coming to charitable trust provisions, basically certain changes are there for charitable trust. What was happening? The small charitable trusts were finding very much problem. That is basically 2 years, 3 years back in the budget, the provision was introduced. That is, they had to register it, and registering the website was not operating, and due to some other reason, the application was getting rejected and all. And small charitable trusts, etc. The problem was that they were not having such people who were able to handle it properly. So what has happened in Finance Act 2025, the new provision has been added, that is 12AB1 has been added, which says that now the registration which has been given to the charitable trust, the time limit will be from 5 years to 10 years. A small charitable trust, now the small definition of the small charitable trust here is that the total income of that trust for the previous year of the application should be less than or equal to 5 crores. That will be treated as a small charitable trust. And for application made under subclause 1 to 5 of the clause 12A1 subclause AC, so that will be considered. The application will be 10 years. So after 10 years only you have to make the application. And what was happening for any minor default, the application was treated as a specified violation under clause Z. So this Finance Act, what it does say that this will not be treated, now it will not be treated as a specified violation. It will be treated as registration as not complete, and the time limit will be given them to make this application as complete. So these two changes, big changes are there. And another change as to new section has been introduced, that is 12 ASC. It says that if any small trust wants to close that is charitable, they don't want to carry on the charitable activity, but they want to merge with another charitable trust who is having the similar activities, and both these trusts want to carry on the charitable objects which are on the similar lines, and they can do this. The object should be similar. Both these trust should be registered under 12A, 12BB or approved institution under subclauses 4 to 6A of the of section 1223C. Then chapter 12 EB will not be applied. Means basically what was happening at that the maximum reserves and etc. was chargeable to maximum charitable maximum rates and all. So if they comply with the rules and guidelines which has been given under the new section, if they fall within that guidelines, then the tax will not be applicable, and it will be treated as the same trust carrying on the business on the similar lines, and maximum marginal rate tax will not be applicable. So this amendment is effective from 1st April 2025. So these are the three major changes in charitable trust. And when you file this returns, those trusts who are filing the returns of the charitable trust, you have to file this annexure correctly. So if they have opting for this, any changes have been made for related to trust. So this is basically related to the filing section 115 TD compliances. This is annexure has to be filled up correctly. Then coming to per se, this is changes in the ITR, that is 112A. That is 1 lakh limit has been increased to 1,25,000. So ITR 1 and ITR 4 can now be used. And ITR 3 form that was notified now, scheduled capital gains. Now since we have two rates, so splitting has to be given. So 20th after before and after 23rd July, the breakup has to be given. And capital loss on share buyback is now allowed. Corresponding dividend, so it is capital loss on share buyback. So share buyback, whatever is there, you have to report it as an income from other sources and not as a capital gains. So that care has to be taken while filing the returns. Asset and liability reporting, earlier the reporting was up to 50 lakhs. The income, that is if the person had income more than 50 lakhs, but now that has been enhanced to 1 crore. So if you have an income of 1 crore or more, then only you have to report it, otherwise not. Then reference that is about cruise business 44BC. So if it is opting, that's presumptive taxation schedule has been added in ITR 3. Then ATC 1013A, so deductions, if you are claiming that deductions, so that additional reporting has been added. And TDS section code, that is in TDS schedule. Earlier you were writing about some sections, we were writing that is 194, 194A, 194B, etc. TDS claiming, but now that has been, codes has been added. That is, while payment of TDS, we are selecting the codes. That is 94J, 94J. So that has been replaced with the codes now. So that is the change in the ITR. So this is the comparative figures. That is what was reporting. That is single schedule was there for all change. Now as capital gains, share loss buyback. Earlier assessment year 24-25 was not allowed, but now it is allowed. So you have to report in other sources. Then it will be allowed. Then presumptive taxation we discussed. TDS returns, the section codes we write it. Then long-term capital gains we already discussed. Bank account disclosure, yes, you have to disclose all the bank accounts which are operative, but one account definitely which is liable this for refund, that has to be marked there. Then opting out of the new tax regime, that is 10IA details must be furnished. In case of ITR 3, ITR 4 is mandatory. The acknowledged member, if you don't write the acknowledged member, return will not be accepted. That is mandatory. Then in ITR 5, till last year we were required to give only basic details. But now basic details, that is LLP, you have to write now LLP identification number, PAN number, updated business commencement details, that is made mandatory. Then about form selection, that is in ITR, now you have to select the due dates, that is what is the due date, July 31st, October 31st, November 30th, so that till last year the problem was there while processing the 234A interest was coming. So let us see how these issues are being now tackled while processing. So this new feature has been added in the ITR. Then about companies who are having more than 50 crores or more seeking the refund, they will have to furnish the ALI number that has been added in ITR 6. That is institutional registration registered trust, that is we already discussed about 115D. Then about capital gains account stream disclosure, companies must provide information about the amounts deposited under the capital gains account scheme, which was not there last year, is now added. Then about those who are dealing in the sale, profit and sale of raw diamonds, then they are required to disclose the profit. Basically, must be more 4% or more of the gross profit as per the rule 10 TIA. This is what is stated in the business profit schedule that is made mandatory. And in case of political donations, that is section 80 GC, companies must disclose the transaction details. That is, now you have to give the amount, transaction number and IFSC code number. So all full details you have to give to the political party's donation with all the details, to whom you have contributed, which bank, etc., with transaction number, IFSC code, etc. So these full details will be captured for cross-referencing, because last year many political donations, if you see the notices that come, were bogus donations and all. Then about this companies, that is deduction for startups. Startups, they have included much more information to be added. That is, companies should provide now for the startup, this date of incorporation, nature of business, certification number, and deduction amount claimed. And then when was the first assessment year in which the deduction was claimed, that this all additional information is added. And then now for ATIEC disclosure, this is mandatory, which has been made. And for micro and small medium enterprises, these companies must disclose the sum payable to MSMEs beyond the prescribed time limit. Now this has been added basically for all the returns. That is, you have to give full details of MSME. That is, what is the amount for all the businessmen. That is basically what is the amount which is outstanding at the year end, out of which the amount which has been paid within the specified time, and what remains the amount which is not remaining unpaid beyond the specified, means unpaid beyond the time limit. So that will be disallowed, and it is for all the businesses. And similar way on this, for the tax audit persons who are covered by the tax audit, auditor has to certify this. So this is the enhanced reporting in the income tax return as well as in the tax audit. Then online games, that is, now see the business is expanding. Many online games, online websites have started. So these companies must report the income from online gaming winning separately. So now it says that additional information has been started over here. And now when you are filing this tax audit reports, till last year we were required to give the acknowledgement number of the audit report. But now you are required to give the UDI number also. So let us see whether we have to file the UDI number separately, give the link to the UDI number separately. But mostly I would see that when the UDI number is mentioned here in the return, it should automatically get updated on the income tax portal. It should not be required to finish again. So let us see that our extension has come. So see what is coming. Then about FSI, schedule FSI, basically all resident SSEs who are having income from foreign sources or who are having assets out of India, then they are required to fill up this schedule FSI mandatorily. So from which source, from which country, They have got the income, the tax identification number over there in that country, and they have clubbed that income over here in India, and any tax which is deducted and that relief they are claiming it in India. So are the relevant clauses of that double taxation avoidance treaty over there in India with that country. And when you are filling up this and when you are taking the benefit of this, then you are required to also file form number 67. If you don't file form number 67, you will not be getting the credit of the tax which has been claimed as a relief from the foreign country. And any specific instructions related to this, you can refer to the instructions which are giving up for filing is this. The instructions are there in the schedule. You can refer to the schedule and fill up the schedules properly to get the proper credits for them. Then coming per se to other schedule, that is for the startups, you are required to give much more additional information, basically about the shareholding details. Who were the shareholders at the end of the financial year? As when were the shares allotted? What the shares holdings has been transferred? What is the share application which is pending? All the details has to be given. What is the proposed issue price for the shareholdings which has been pending for allotment? When the application money was received, number of shares has been applied for, any premium amount, etc. And details of the shareholder who is not a shareholder at the end of the previous year but was a shareholder anytime during the previous year. That information also has been given to be reported. DPIT registration, for definition of the startup venture company, you have to refer to the definition as per the DPIT guidelines of 19th February 2019. So this schedule is mandatory for startup companies, SH2. So all startup companies will require to fill up this schedule. Coming per se, so this is basically related to the changes in the ITR. These are the main changes in the ITR. I'll take up some questions over here. Can you get the PPT? PPT will be submitted if the remuneration is fixed at 12 lakhs rupees per annum. TDS applicable on bill. I'll coming to TDS. It is coming. Buyback of shares effective date starts from the start of the year. Effective is at the start of the year. Okay. You will get the slides. Okay. Checklist of the precautions to be taken by the ITR filers. One of the biggest reason is that because of notices of the defaults which are coming, that is for precautions to be taken by the ITR filers. That is what is happening now. Income or the client comes and says, my income is this. 26A says the income is this and income as per AIS and TDS is this. Now which income should be taken? This is the biggest question. So what has to be done? So basically, if you see, my view is that whenever you have to reconcile the income, because sometimes all this, some income may not be correct in 26 years, some income may not be correct as per AIS, TIS. So if any details or entries which is found in AIS, TIS is not correct, you can submit your statement over there. See that your information has to be submitted if the information is incorrect over there, and AIS TIS is an interactive statement. So if you submit your declarations over there with the supporting document generally is not error. You submit your details over there. So it is when you submit your details over there, it automatically goes to the SSC who has filed the details for the clarification. And it goes for the clarification, and even if it is not corrected over there, you can submit this as a grievance to the assessing officer on the online portal, and you can write it to the CPC also through the grievance. So sometimes if when the notices come, so if the grievances etc. is available, that income is not belonging to you. So that can be this can be helpful, or it can save to you at the time of scrutiny assessment etc. So, but do not keep anything pending or do not keep any information if it is not pertaining to you, without doing any correspondence or writing it to anybody. So that care has to be taken. So these are the some checklists. So before filing the returns, you see that you update your master list or master data or profile. So if there is any change in the master data or profile, any address changes there, then update the address. And if there is any change in the email ID and the mobile number, please correct it thoroughly, because all the correspondence now are done on the email ID or the mobile number. For us, change the mobile number, update the mobile numbers and the email ID correctly. And if there is change in the address in 26 days, verify it. Then if the addresses have been changed, then update by filing form number 49A. Validate the bank accounts. First bank accounts are there, whatever the bank accounts are there. If any of the bank accounts which are not operative, remove it from the system on the ITD portal. Delete it from the ITD portal and update the new bank accounts which are there. All the bank accounts should be updated, validated with the bank account. Report the deductions which are eligible properly. Compute the income correctly by comparing with the AIS, TDS in 26 days. Claim the losses as per the intimations, because whatever the intimations you have received, based on that intimation, only the losses will be allowed. If the losses are not available in the intimations, the losses will not be allowed. Then file the returns properly and pay the taxes dues and any default notices which has been received after filing the returns. Because sometimes the intimations come to you. When the intimations come to you with no refunds and you treat it as the returns has been accepted and now then there is no taxes paid, you don't verify it. People generally don't verify the intimations. But in the intimations, there are some losses or some incomes which are there, which may not have been allowed, or some deductions may not been considered. So in case such things are there, it is not been allowed, please file the corrections, revised return, or file the rectifications to this and get this rectified. And any default notices which come, they have the timelines of 15 days. You need to comply with this. Otherwise, there is a long procedure to get this corrected. It will take some time. Complete the verification of the return income. After filing the returns also, you have to complete the e-verification in the time limit and verify the intimations from the CPC to complete these formalities. Another change is that till last year, Aadhaar enrollment ID was accepted in filing the returns, but now it is not mandatory required and it will not be accepted. Now you have to provide the Aadhaar number. So without Aadhaar number, the returns will not be accepted. ITR 4 requires opting out of new tax regime. That is, ITR 4 it has made mandatory. Schedule TDS requires disclosure of TDS section. ITR 1 and ITR 4 TDS 2 was schedule was not there, but now it has been added over there. Then certain helpful tips are that is basically private software generally, because if you see what the details which we discussed earlier, around 60% people are still using private software. It is good that all the details are available directly. It captures the details from everywhere and details are made readily available. Your returns get prepared in an easy way. But definitely it is good, but blindly you should not rely with the private software. Sometimes some details are there because details are there that details may software, when it is prepared, private software using it, definitely you run that software on the income tax department's utility also. Whatever the JSON file which is generated, try and compare both these computations which is generated on the and compare it. So you will get the idea whether your software and the income tax department software are running at par. So this will give you a rough idea that your computations you have prepared is correct or not. Sometimes what will happen, the data feeding is the main data feeding. Whatever the data entry you do in the software is the result of the details what it comes out of the software. Now suppose if you see income from this dividend. Now, dividend, if you buyback of shares, now buyback of shares, suppose if you report it as a capital gains, software is not going to understand whether that should be treated as dividend or it should be treated as capital gains or not. Suppose if any person, buyback of shares is just like a sale of shares. If you enter it as a capital gains, that loss will not be allowed. But if you report it as income from other sources, it will be allowed. So these type of some technical mistakes are which are there. So this will not be understood by the software, but that we have to apply our knowledge and we have to see that we report it correctly. And validation utilities of the income tax departments are updated generally from time to time, but definitely they give you the codes which have been given by the private softwares are also by the income tax departments only. But then also sometimes there is a time lag between the codes which are given, which are used by the private software. The time limit though definitely has been reduced for now the utilities are not getting updated so fast. Earlier they used to be there, but then also it is better that for our satisfaction, we should see that we compare both the computations, so that when we prepare the computations and both the figures are matching, we should at least be satisfied. So if some error comes, we don't have to redo the work again and again. And one thing is that when the computers era is very easy to override because people are now trying to change the codes which are written by the department, which are because ultimately what you see it is software is just writing of the codes and you edit the codes. Editing the codes, it is very easy that you can compute anything, you can do anything by changing the codes. When you change the codes, it can give you any figure. And by doing this, you are violating not the Income Tax Act, but you are violating the Information Technology Act, which is basically a big crime, which should not be done, which is not suggested. So don't try to override any such thing or do any such things to just, because it is a serious crime, which should not be done. And now AI is being introduced. AI tools are being developed, which will take over the routine task, and it should be benefit. Definitely, everything will be available with you, readily available. So it will save a lot of your time. Definitely, should not be taken as a competitor, but can use how better you can take the benefit of it, how better you can use it. Though is it a challenge in the near term. Now everything is available readily with you. It can be a helpful employee if employed properly. But again, it can be a problem if the tool is not programmed properly. Those who have done the AI course of the institute, they would be aware how it can be a problem. The department has already started using it, and they are going to use it in a much better way in the coming years. So challenges are there for the professions, and now the new returns utility are going to come with the AI tools. Assessments have already started, everything has started. So see how better you can utilize it. It definitely depends on our capacity, how we can better use it. So it can be one type of employee beneficial to us. So take the benefit better in a better way. Then another change is that about amendments in the section 132(8), that is retention of seized books of accounts or other documents. There is earlier the time limit for the retention of books of accounts, that is, which was 30 days from the date of assessment or reassessment or recomputation order, is now amended, that is from the 1 month from the end of the quarter assessment or reassessment or recomputation order. That is another change. Then coming to this is basically related to the income tax provision. You want to take any question answers related to this income tax return, then we can complete it.
Sir, we'll take at the end. That will be the best.
Okay. Then coming to 1 minute. Then coming to TDS provisions, that is basically TDS. There are some amendments. That is from 1st October 2022, we had salary 192 to be amendment, wherein it says that now employer has to consider, that is, they have given a notification which was there. 192 to be says that you have to, employee has to inform all the other income to the employer, and such other income which is chargeable to tax, not being the loss under any other head. So employer has to take the declaration from the employee and has to consider all the income, and whatever the TDS which has been TDS or TCS which has been deducted, that has to credit, has to be given. And loss, for the loss also, loss only from the house property has to be considered. And also the option to shift out of the default tax. So there is a 12BA form which has been specified. So declaration has to be taken in that form, and that form has to be preserved. So if there is any assessment, at that time this form has to be submitted. So based on this form, the report, the necessary TDS return has to be, tax has to be deducted and has to be filed. So this was one. So this was the amendment, is as employee to report this income other than the salary, TDS or TCS inserted from 12BAA form and details of property. And there are another forms which has been amended, that is Form 10E, Form 16 Part B and 24Q. So all based on this, Form number 10E, that is related to relief under section 89, that is 89(1). Then form number 16 Part B1 has been amended because the credit of TCS credit and TDS credit of the earlier from any other source, that line item has been added, and accordingly Form 24Q annexure has been amended. So these are the amendment in section 192B. 2B. Another thing, that is section 193, that is 1st October, the interest, that is basically last year floating rate taxable bond were introduced. So that item has been added in section 193. So that any TDS which is deducted will be deducted under section 193. The threshold limit remains the 10,000 rupees only. That is about 10,000 TDS will be deducted. That is added. 194 dividend, that is section 222F. That is, says that recipient of shareholder, that is on the buyback of the shares, TDS has to be deducted. Recipient of shareholder will be paying the tax received on the buyback of the shares, effective from 1st April 2025. The dividend limit, this TDS limit has been added from 1st April 2025. The dividend deduction, TDS dividend has been increased from 5,000 to 10,000. Then about 194 dividend, that is, it says that 4 items, basically 5 items are there. It says that 5 types of distribution will not be considered as a dividend. That is, first it says that any amount which is distributed by a company to a shareholder is not to a shareholder where the distribution is on account of liquidation for participation on the surplus share. So liquid on the account of liquidation to participate in the surplus asset. So at the time of liquidation. Then it says that distribution which is out of distribution is attributable to the capitalized profit of the company, representing the bonus shares allotted to its equity shareholders after the 31st March and before the 1st April to the 31st March 1964 and before 1st April 1965. So any amount which is distributed by the company which is out of the profits from 31st March 1964 and before 31st April 1965. So if that amount is distributed by the company, then it will not be considered as a dividend. Then any advance or loan made to a shareholder or the said concerned by the company in the ordinary course of business where the company's main business is lending, that will not be considered as a dividend. And any amount or any dividend paid by the company which is set off by the company against the whole or any part of the sum previously paid by it, and it is already treated as a dividend. to the extent it is set off will not be treated as a dividend. And lastly, it says any distribution of shares pursuant to a demerger by the resulting company to the shareholders of the demerged company, whether or not there is a reduction of capital in the demerged company. So these 5 things will not be considered as a dividend. So any amounts you do will not be, when you have to receive this amount, you will not be considered as a dividend. Then interest on securities, there is change in the rates. That is for senior citizens, earlier it was 50,000, that has been increased to 1 lakh rupees. Non-senior citizen 40,000 to 50,000, and for others 5,000 to 10,000. Payment to contractors, there is a change in the definition of definition. That is, some part has been included, that is advertising, broadcasting and telecasting, carriage of goods or passengers, manufacturing or supplying a product according to the specification of a customer, using a material of customer is now included. This is the definition of the work. That is, this now liable for deduction under section 194C. And what has been excluded from 1st of October is manufacturing or supplying a product according to the specification of the customer using material from the others. And whatever item which is forming a part of 194J will not form part of 194C. So this is the change in 194, the definition of the work. Then there are certain changes in the rates, that is basically reduced from 5% to 2%. That is 194DA, payment from insurance policy, commission on lottery ticket 194G, and commission brokerage. Earlier the rate was 5%. Now it is reduced to 2% from 1st October 2024. Transfer of certain immovable property, that is from 1st October 2024. It says that the value of aggregate value of the property will be the value of TDS deduction, not the number of transferor or transferees, not the number of transferee or transferor. So if the value of the property is 50 lakhs rupees, it will be liable for TDS deductions. Number of transferor, number of transferee is in, it should not be considered. If the value of the property is aggregate value is 50 lakhs rupees, liable for transaction TDS deduction. One is also says that rural agricultural land, since it is not a capital asset, is excluded from this section. Then 194IB and 194M, payment from 1st of October. This rate also, earlier it was 5%, has been reduced to 2%. 194O, earlier rate was 1%, reduced to 0.1% from 1st October. Most debatable section, that is 194T, TDS on payment to partnership firm. Now TDS is applicable. That is from 1st April 2025 onwards. Any payment, that is which payments? The following payments, that is it says that TDS to be deducted like earlier, all other payments, TDS will be deducted earlier, or TDS is to be deducted earlier of credit or sum of payment in the books of accounts of partner, or actual payment to the partner, whichever is earlier. 10% of the amount made to the partners of the firm, single or aggregate payment, means now income will be payments covered are salary, remuneration, commission, bonus, interest on any account, even loan account is not a capital account. So any payment by way of a salary, remuneration, commission, bonus, or interest on any account will be, if made to the partner, will be TDS liable for TDS from 1st April 2025. So 10% TDS has to be deducted. Another here it says that certain it says that provision of higher TDS rates for ITR non-filers is not applicable. Payee partner cannot obtain the certificate under section 197, and no TDS and lower rate, even 15G, 15H cannot be obtained. Adjustment of excess deficiency and TDS deductions from subsequent deductions in the same financial year cannot be done. If the TDS is not deducted, then 40 AIA applicability will be done. So problem here is that, so this person cannot, partner cannot apply for 197 certificate also. So these are the provisions related to 194. We'll discuss it in the last, we'll take it in the queries, whatever the queries are there. Then 196B, that is income from units of offshore funds of long-term capital gains transfer and income by way of interest or dividend or long-term capital gains of foreign currency bonds and GDRs. Earlier, the rate was 10%. From 23rd July 2024, the rate has been increased to 12.5% from 10%. Then, from 1st October 2024, earlier you were not allowed to apply for lower rate certificate in case of 194Q, that is TDS on goods. Now you can apply for lower rate certificate under 197. That is now permitted. Coming to returns filing changes. That is, now correction statements can only be filed up to the period of end of the financial year from which the statement has been delivered. After 6 years, you cannot file the correction statements. This is not permitted from 1st April 2025. So this is the final. So suppose if 2000 now, if I want to file prior to 2019, I cannot file the TDS returns, any correction statement prior to 2019. Coming to 206C and to the TCS related amendment, that is 2061F and 2061C. Sale of motor vehicle, we had 1% TDS, that is TCS, more than if any vehicle which is purchased for more than 10 lakhs. Now, one luxury goods has been added in this provision from 1st January 2025. The list was already, the provision was already notified, but the list was still not notified. It has been notified now on 24th April 2025. It says that the following 10 items are there. That is wristwatch, art piece, collectibles, etc., etc. This is the list of the items which has been notified where any purchases, it is there, it's more than 10 lakhs rupees, TCS has to be deducted at the rate of 1%. Then about LRS packages, that is any payment which is made out of India, effective from 1st April 2025, there are minor changes over here. That is TCS has to be collected by the authorized dealer. If it is, there is a remittance of more than rupees 10 lakhs in a financial year. So if any amount is remitted for overseas, overseas, if that amount is out of the education loan if it is overseas for education purposes, if it is from the financial institutions specified in 89A, financial specified under section 80E, if the borrower amount is remitted out of that funds, then there will be no TCS. If it is for education or medical treatment, TCS will be 5%, and for other purpose, it will be 20%. And seller of overseas tour program package till 10 lakhs, TCS will be 5%. Over more than 10 lakhs, it will be 20%. It is the aggregate from all the authorized dealers. Declaration has to be given. The declaration has to be given by the SSA when he is buying the currency from any authorized dealer. Up to 10 lakhs, no TCS. Then 2013, section 201, subsection 3, it says that no order to the NRA after the expiry of 7 years from the end of the financial year of TDS payment, and if the correction statement is filed 2 years from the end of the financial year, then which TCS statement is corrected, whichever is later. And 206C7A, no order after the expiry of 6 years from the financial year in which TCS was collectible, or 2 years from the end of the financial year in which correction statements was delivered. So this is related to time limit for the correction for the defaults. Coming to the interest to collect this, basically, if there is any TDS tax which was required to be collected, which is not collected, or then till the date of collection, interest will be payable with 1%. If the tax has been collected but not paid, then interest will be 1.5%. That is, this is related to TDS penalties. These are the chart. Is what was the TDS threshold limit for the last year? There is financial year 24-25, and what is the financial new limit for the financial year 25-26, and what was the rate? This is just for your purpose, reference purpose. This will be for a reference purpose we are sharing with you. And 206 AB, that is higher rate of TDS for non-5 years, has been omitted from 1st April 2025. So 2061H, that is sale of goods, has been removed from 1st April 2025. Even 206C1, that is about the tender leaves, etc., has been removed. So just this is for reference purpose, which is applicable, which is not applicable. You can just refer to this. Coming to this, penalties. That is, if you don't comply with the TDS and TCS provisions, what are the penalties? So one such penalties I would like to highlight here is, that is about the penalties related to prosecution related to 276B and 276BB, that is a rigorous imprisonment from 3 years to 7 years plus fine. That is basically what happens, that when you fail to deduct TDS or TCS deposit, as they demand, that is when the demand is there, TDS is not deposited and that amount is extraordinary amount, then only this is levied by the department, and they have to follow up the certain procedure which is levied. And for this purpose also, they have to go to the certain procedure which is specified for this. They have to take the approval. And secondly, if the SSC has failed to pay the TDS, and despite of paying the TDS, if he paying the TDS, he is of the opinion that some actions can be taken against him, then he can go for the compounding of offenses. There is a compounding of offenses provisions also available. He can take the benefit of compounding of offenses. There is a provision under that. He can go through this and he can save through this. Take the benefit of this compounding offense and the benefit of 276B and 277 can save through this. Another, coming to the last is, if this compliance TDS is not been deducted, apart from this fines and penalties, there are disallowance of expenses under 40A, but it can be saved provided the person to whose TDS was required to be deducted has deposited the TDS. Then in that case, what will happen? The person, the deductor will be liable to pay the interest to the extent amount the TDS to the extent the TDS was liable to be deducted. The amount of the liability has been discharged by the taxpayer from the date the TDS was required to be deducted till the TDS till the amount of the tax has been paid. To that the time the interest has to be paid by the TDS deductor, and he has to submit form number 26A from the party and has submitted. So basically, this was related to TDS and TCS. Certain other provision has been modified. That is, reassessment provision also has been modified in the Finance Act. The time limits has been for issue of the notices and completion of assessment has been amended, and the power has now been given to the additional commissioners, joint commissioners, to approve the notices and approve the cases irrespective of the time allowed for the elapsed period. Even the search assessments for the block, the definition of the block assessment period has been modified for the single assessment period of 6 years, and the entire the other relevant provisions relating to the same has been modified. The declaration timing for the declaration for filing under the Vivad Se Vishwas scheme was extended till 30th April 2025 by notification number 32 on 8 April 2025. Coming to 3CD, there are 7 to 8 stages what we covered in our provisions. The same provisions are there. That is 44 BC. This has been added. 35A to AC, 32 AD, and 35 this provision not be applicable. That has been removed. Then about securities, SEBI payment to SEBI and all, what is made. So that expenditure is this. If it is paid, then that is to be disallowed. That has to be certified by the auditor if it is there. So that has been added. The institute is coming up with a detailed guidance note for the same. Then MSME, what we discussed, that SSC is covered by the tax audit. then the auditor has to certify this. In that, the amount earlier, only the amount which was inadmissible as an interest, that was to be given, but now the along with the interest, the total amount which is to be required to be paid to the MSME, which is outstanding, that has to be given, and from that amount, what is amount which is paid within the specified time and which is not paid up to the given time, that detail has to be given. This is the detailed statement. There is clause number 22 is the biggest reporting requirement which will come. Another requirement, that is about the buyback of shares. The full details about the buyback of shares, which is clause number 23 has been added, wherein what is the amount which is received through the buyback, that auditor has to give, and what was the cost of acquisition, the target compliance with the taxability of arising from the buyback of the companies, that in case of companies has to be given. Then about 40A, till last year, what was happening, that auditor was required to certify about the disallowance under 40A IA about the payments related to where the TDS was not deducted in case of resident assessees, and which was to be disallowed. Here now that scope has been expanded to the non-resident assessees now. Clause number 26 expansion has been expanded. Then clause number 28 and 29, this reporting under section 56 to 7A, 7A and 7B has been omitted, since these provisions are no longer applicable now. Then about in clause number 31, this is about loan taken and loan repaid. We were required to give about the acceptance of loans and deposit through check, draft, any other banking mode. Now there in that clause, certain in that now additions, the codes has been added. So now your reporting will be inside a drop down box has been with the codes has been given. So you have to report with codes. That is for certain categories of loan takers, you have to select with the specific codes. That is codes. So that will be codes. Reporting will be through codes now. And in another new clause has been added, that is 36B, wherein buyback of shares for TDS under 115 QA has been added over that clause. Then coming to lastly, that is the last reporting about when to file the ITR, when this, that is what can happen without deduction, without doing this and all, but not possible till 26 AS, 26 IA, everything is fine, because nothing is available right now, nothing is on the filing stage. The TDS tax size to match, everything has to come. We will take up the question, but because we have to complete everything before time, but struggle has to conclude this with a saying that every struggle of the Bhagavad Gita slok, which says that every struggle becomes a dance and every tear becomes a devotion, and every step leads to the closer self. And we suffer because we refuse to let go. Thank you very much, everybody. I tried my level best to cover everything which was possible by me.
Thank you, sir. Exhaustive presentation.
The questions.
सर दूसरे कोई पूछे उससे पहले मेरा ही मैं एक थोड़ा पूछ लेता हूँ. बायबैक का था. बायबैक सर वो जो डेट कौन सी डेट से इफेक्टिव होगा बायबैक का?
वो 1 अक्टूबर है मेरे
अक्टूबर के पहले तो एग्जाम था रिसिपिएंट का.
हाँ, यस.
So it will be applicable from 1st
October, yes.
Okay. और सर लिक्विडेशन का था. लिक्विडेशन में जो पेमेंट मिलेगा सब शेयर होल्डर्स को ऑन लिक्विडेशन, it will be treated as capital receipt in the hands of the shareholders.
Yes.
And it will be taxable as accordingly.
Yes. लिक्विडेशन में उसमें ऐसा है उसमें वापस दो तीन चीजें आपको देखना पड़ेगा. उसमें कैसा है कि बेसिकली वो जो डिविडेंड में आता है या नहीं आता है, हम लोग ने अभी जो 4 पॉइंट डिस्कस किया ना, उसमें देखो कहाँ बैठता है.
ओके सर।
हम लोग ने पॉइंट डिस्कस किया तो 4 क्लॉज में
Yes.
दिखा के देखो कहाँ बैठता है, वो शायद एग्जामिनेशन में भी निकल जाएगा तो निकल जाए, आपको उसको एनालाइज करना पड़ेगा कैसे।
ओके। और सर आजकल वो 194 आई है प्रॉपर्टीज के टीडीएस में,
हाँ
ये लोग क्लब हाफ फी, ये फी वो करके तो 5-7 लाख रुपए और ले लेते हैं बिल्डर लोग, तो उसके ऊपर भी टीडीएस आएगा ना अभी तो?
194 आई है में तो खाली प्रॉपर्टी टैक्स पे ही आना है, प्रॉपर्टी पे मेरे हिसाब तो खाली प्रॉपर्टी पे ही आना चाहिए, तो कॉस्ट ऑफ द प्रॉपर्टी में वो तो ये अलग चीज हो गया, उसको मेरे मेरे ओपिनियन तो नहीं आना चाहिए, आई एम
ओके
ऑफ ओपिनियन नहीं आता है।
ओके।
कॉस्ट ऑफ द प्रॉपर्टी लिखा होगा, प्रॉपर्टी की कॉस्ट है, वो तो अदर चार्जेस है।
हाँ मतलब वो ये क्या बोलते हैं, क्लब क्लब चार्जेस, ये चार्जेस वो कर करके वो बहुत सारा अमाउंट
इट
ले
इज
लेते
नॉट अ कॉस्ट ऑफ प्रॉपर्टी ना, इट इज नॉट अ कॉस्ट ऑफ प्रॉपर्टी, इसमें मेरी डेफिनेशन तो खाली प्रॉपर्टी का बेसिकली तो अदर चार्जेस आया उसका,
हैं। ओके।
तो खाली
चैट में
उसका स्टैम्प ड्यूटी वैल्यू भी आप प्रॉपर्टी में बोलोगे तो कैसे होगा, तो हम लोग नहीं आता है।
सर एक इसके अंदर है, चैट के अंदर, whether the payment in the nature of group insurance premium for employee paid to insurance company will fall under 194C of the Income Tax Act. Payment to
कहाँ से आया वो वन, कैसे होगा वो, मेरे हिसाब से तो नहीं होना चाहिए ना।
payment to association by members for residential refresher course or for the matter may or payment of other sum as a participant fee for education seminars like this. This won't be
कैसे
94C
आएगा
won't
वो,
answer.
कैसे आएगा,
It's
कैसे
not
आ
a
सकता है,
contract.
इट कैन नॉट कम, नो। It cannot come.
If remuneration fixed at 12 lakh per annum, is TDS applicable being below taxable income?
Yes, 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 yes. Anything above 20,000 TDS is applicable.
No, he is asking below taxable limit of income. My income is 12 lakh.
Below taxable limit is of the partners, na? It is not of the firm. Firm is liable for TDS. 20,000 ke above,
Yes.
whatever is paid below above 20,000 by the firm, TDS is applicable.
Interest on capital in addition to remuneration payable by firm, considering this option also.
Yes, yes. Whatever in addition 20,000 above 20,000 to per person per partner is tax is TDS is applicable.
Considering the new provision of TDS remuneration to fix in beginning of the year.
Then you have to amend the partnership deed accordingly every year.
One more message. Okay, sir, can we share this PPT?
Yes, yes. It is available. It is available everywhere on Tax Guru, on the public portal. Everywhere it is available. You can keep it. Yes.
Okay.
Everywhere
So
it is available. You can.
बहुत सारे participant का question था, this will be shared or not. So we will share in the group, in tax friend
Yes,
groups and
yes,
tax
yes.
practice
You
association
can
group
share
also.
everywhere. You can share everywhere.
Yeah.
No problem.
Any other query? If any
Okay,
participant have, can raise the.
shall I file updated return under section 199 only for the claim of TDS which is not claimed in the return and still I pay have to? No, you have to pay additional tax. Only TDS will not be allowed. Harshad Patel, TDS capital loss on share buyback is allowable only after 1 yes, and you have to report it under income from other sources.
Any other participant have question can raise your hand. I can unmute them and they can ask directly to the question, speaker. PPT will be shared in the tax friends group and tax practice association group. Okay, any more question? Considering the consideration for transfer of any movable property shall include all charges of nature of club membership fee. I think this has been already been addressed by the speaker.
Considering the for transfer or any immovable properties shall include charges for transfer membership fee, car parking fee, electric water fee, maintenance or any simulation which immovable property. This is term consideration defined. Okay. For transfer of any Mumbai property, it shall include any charges in the nature of club membership fee, car parking fee, electricity fee, maintenance fee, advance. But nowadays the agreements are such that they are drafting it in such a way they consider it everything, including all they take a consideration now for everything. You know? Now that new agreements, if you see, they take it all inclusive now everything. New agreements are in such a way that now it is all inclusive only. They don't charge separately everything.
Okay, one more question. Will we file updated return with tax after? Can we claim TDS refund in Form
Yes,
71?
TDS refund is not allowed. Nothing will, I mean, in updated return, you cannot claim any refund.
How to treat buyback cost after new rules?
Buyback cost is the amount what is paid. It is already given in that this. There you refer the definition of the buyback cost. It is already there in the provision.
Okay.
Hope you all enjoyed it.
Yeah, sir. Very much informative.
TDS on payment from which financial year 25-26 from 1st April 2025. And rate is 10%. Section 194T.
Correct, sir. TDS can be claimed in updated return subject to condition.
TDS can be claimed. Refund cannot be claimed.
Okay.
Person has not understood whether TDS can be claimed, but refund cannot be claimed.
टैक्स भरने को आना चाहिए, उसके सामने TDS का ये हो जाएगा, रिफंड नहीं मिलेगा.
Refund can be claimed. Very good.
Section 54F UTS exemption amount to invest is the capital gain is worked out as per Section 54, 54F, 54 EC exemption amount to invest is the capital gain as worked out as per with indexation or without indexation. There is
Same provision which was there in the earlier previous or same remains for the resident. What was the old provision remains the same. It doesn't change.
क्वेश्चन इज एक्चुअल फॉर्म 71 के रिगार्डिंग में थोड़ा कंफ्यूजन है. ओके, अभी है तो क्या कर सकते हैं. आई डोंट थिंक कभी कुछ है और कोई. पीपीटी आपको जो टीपीए पे एक मेंबर है उनको टीपीए के ग्रुप के थ्रू मिलेगा, टैक्स फ्रेंड्स के मेंबर्स है उनको टैक्स फ्रेंड के थ्रू मिल जाएगा. सर ने थोड़ा एलएलपी के बारे में भी पीपीटी बनाया है, वो भी सर ने अपने इंटरनल के लिए था, वो भी हम ग्रुप में शेयर करेंगे सबके लिए. थैंक यू सर फॉर दैट ऑल्सो.
सबको काम आएगा और कुछ नहीं.
या थैंक यू सर फॉर दैट. और कोई रहेगा तो अदरवाइज फिर आगे बढ़ते हैं. सर एक सेकंड में जरा विजय भाई को पूछ लेता हूँ, इसके अंदर कोई है, ये है कि नहीं, यूट्यूब पे कोई क्वेश्चन है तो. 1 सेकंड ना सर.
tax audit guidance note is coming. Institute is coming up with a guidance note for Form 3CD, revised Form 3CD. Section 54, 54F and 54EC is the capital gains as worked out as per indexation or without indexation. 54EC we have to work out with indexation, whatever is there with indexation. 54 you have to, I think 54 also you have to go with that indexation benefit also. So it remains the same, whatever was there in the old. To go with the old provision, it is there, same remains, there is no change in that. For the resident SSC, which is prior to the 23rd of July, if it is property purchase, there is no change in that. Thank you, Ashok Magnani sir. Good to see you after a long time. Provision is very clear, 54, 54F and 54EC. Just go through that provision, is very clear, clearly written. Tax exemption for 54F, crypto losses is not allowable. Crypto losses nowhere is allowable.
Any other questions?
VDA tax 54F VDA, I don't think you have to get an exemption. You have to pay straight away tax on that.
Thank you, Avinash sir, for a very informative and exhaustive presentation. And it has opened eye of a person like me who are blindly relying on the software. सॉफ्टवेयर में तो जाने तो बराबर ही होगा. थैंक यू सर, वो वेरीफाई कर लेना चाहिए गवर्नमेंट यूटिलिटी के लिए. Now I request Keur Shah to present a formally vote of thanks to Keur, please.
Yes, hello. Good evening, everyone. Thank you, Arvind sir. I would like to thank Avinash sir for such an elaborative and deep guidance regarding the updates and new amendments. I would also like to thank Vijay Kevalramani sir for all the technical support, be it in Zoom or again on YouTube Live as well. And also, I would like to thank all the professionals here to take out the time and join us for the seminar, for the online meet from both TPA and Tax Friends Association. I thank you all.
Thank you, Keur. Now we will stop this meeting. Thank you.
Thank you.